Good afternoon, everyone. Mike over at Charts Don't Lie. I hope you guys are having a fantastic weekend. Put together a video here for you guys that takes a look at the major U.S. indices as well as a couple of different country ETFs that have some very interesting setups going into next week. Before I jump into the charts, I wanted to take a moment and talk about risk management. As you know, I put risk management as the number 1, 2, and 3 most important things that any trader can focus on. And it's important to take a look at it, especially with the markets at all-time highs, confidence being at all-time highs, euphoria being at all-time highs, margin debt being at all-time highs. There's a lot of reasons for there to be a pullback in the markets here, and not a whole lot of people are talking about it or paying attention to it. So I'm not saying by any stretch of the imagination you need to go and sell all the market shorts, sell all of your positions or anything like that, but it certainly would be wise to probably trim some positions or at least move stops up on positions where you guys have really good gains. So in case you do get a pullback in the market, you lock in the lion's share of the profits. Now, the first thing that I've got up on the screen is the smart money, dumb money confidence indicator. And as you guys can see, the dumb money has never been more confident over the last year, and the smart money has never been less confident over the last year. The gap between the two is as large as it's ever been as well. So that's saying, in a nutshell, a lot of people are overly optimistic, while the smart money is starting to pick up hedges, is starting to see reasons to trim position sizes and protect the gains that they've gotten thus far. Now, the other thing I wanted to look at before we go into the actual charts in the market is the percentage of indicators at an extreme. This is also the largest differential over the last year, with a high number showing excess optimism and not a single indicator showing excess pessimism. To me, it looks like the boat is loaded up very heavily on one side, and there's a little bit of a risk of that boat flipping over. So keep that in mind heading into this week, and make sure that you do lock in gains when you've got them and you don't let winners turn into losers. Now, the first thing that I wanted to take a look at is the Nasdaq. Over the last year, especially from June, we really have this resistance line, and you'll see it on the Nasdaq, you'll see it on the S&P, you'll see it on the Dow, that we've run into. And every time we've run into it, we've turned down. We had a little pullback in July. We had that big pullback September into October. We had another pullback off of that line in December. And here we are right back there. And looks like we're starting to turn down a little bit. And if you take a look at the RSI has a bearish divergence setup where price is at all-time highs, but the relative strength is not. So that's something to watch going into this week. In fact, I did pick up SQQQ on Friday, which is the 3x inverse of the Nasdaq heading into this week. Now, the Dow, very similar setup, a little bit weaker. Didn't even get all the way up to the resistance line before it started turning down. It was red on both Thursday and Friday. Once again, that same RSI divergence where price is at all-time highs, but yet relative strength isn't. And when we look at the S&P, very similar once again. Well, we're running into this resistance line that we've pulled back off of over and over again during this uptrend. And here we are right at the resistance line. So all the major indices right here, as you can see, you could put on a short play and cover just above this resistance line. You know, if we break out above this, you know, some people see this as you know, an inverse head and shoulders setup, and that being a neckline, which is certainly a possibility. So if you are going to be short, you have to respect the power that this market has brought over the last few years. Pay attention to it, and you know, if we do continue to head higher and break through the resistance line on these, you know, get out of the way on the short side. Now, the IBB also, and this is one of my favorite kind of short ideas going into the next week, because if we look at this on a monthly basis, I mean, this has been, bar none, the leader in this market. It's up over 400% in the last few years, really, really steep. And once again, we are out of the monthly Bollinger Bands. And the last time that we were really strongly out of the monthly Bollinger Band, we had a pullback here, we had a little pullback here, we had a little pullback here. So here we are again. I'm not by any means calling for a crash, But here we are. You could easily go short, set your stop just above the all-time highs from about 4 or 5 days ago, and your target to cover would be this area of support, which is held, since last April. So you're looking at a 1% downside risk on the short side, and you're looking to get about a 6% gain. That's a risk reward that we like to take. Now, outside of the U.S., there's a number of interesting countries that are set up going into this week. One of my favorites would be Brazil. Now, Brazil, very steep downtrend along with oil since September. You can see this strong downtrend line. We put in basically what I would say is it's a double bottom. This one's just a little bit lower than here, but you've got your low right here, and you've got another back test of that low about 2 months later right here, and a quick reversal higher both times off of that. So from a risk reward standpoint, you could pick up Brazil, set your stop, 32, 32 and a half, somewhere around there. You're taking about $3 worth of risk, and you've got this nice base built here. The target would be back up to this point right here, which is about 44. So you're looking for about a $10 upside for a $3 downside risk. That's better than that 3-to-1 risk reward that we look for. So keep your eyes on Brazil going into this week. And you can also see the volume pattern since we've been building this base. That's been substantially lower than during the downturn. So this could be a bottom that's getting put in right here. The next area I wanted to look at was Ireland. Ireland has been on fire. I threw up a chart of Ireland a few months ago. You had this strong downtrend since March. You had a clear breakout, and then you had that back test. So if you were buying right in the beginning of January, you got in at the perfect time. We did break out of this flag pattern that we've got right here, and now we've run back into this resistance from back in June and May. So what happens right here is really, really important. I think that we're going to turn back down from it right here. If you take a look at the RSI, we're a little bit overbought right here. We've had a big run up since the start of this year, where Ireland is up 13, 14%, and we're sitting at resistance. So I would be watching this week, see if we pull back from this. The target would be to pull back towards this this downtrend line. This trend line that's in place from the October lows and the January lows. So if you can get EIRL somewhere in that 35, 36 range somewhere over the next week or two, it'll probably give you a good setup from a risk reward perspective. Now, India is extremely interesting to me as well here. We've been in this trading range between 66 and 74 essentially since May to January, where we broke out, and now we're in a new trading range of 74 to 78. And you can see where we were on Friday, pushing right on that line. So we have the potential here for a breakout in India, and that breakout would put this thing back in the ability to sort of run time to all-time highs here. So India has been extremely strong for a year. Let's see what happens up here at this resistance point. We're going to continue with some strength. So I would be watching India going into this week. Now, Russia has been on everybody's eyes since the collapse in oil, and it's continuing to have a lot of eyes on it. I would pay attention to what Russia is doing here. If we look at it on a technical standpoint, we've got two downtrend areas here. If we connect September high and the December high, we get a breakout over the last few days, back test, and here we are set up to make a run at the secondary downtrend line, which would be the highs from July through September. And on the upside basis, that's about a 15%, 16% upside. On a downside basis, you're looking at about a 4% downside. So that's got a really good risk reward. Obviously, what happens in oil is going to have an impact here, but you have a really good risk reward defined level. I wouldn't want to really own it underneath this, let's call it 16 and a 25 basis on the RBL, and I would be looking for an upside in the 19s. I hope you guys got a couple of good actionable ideas this week. Once again, pay close attention to your risk. going into this week, see what happens with the markets all running into resistance at the same point in time with confidence and euphoria running extremely high. There is a good probability that we do pull back over the next week or two. Once again, I'm not calling for a crash or anything like that, but, a 5% correction in, the uptrend that we've had in these markets is completely normal. So be prepared for that. I hope you guys have a fantastic week. Take care.